Hello, good morning to you. Welcome to Business. Economic Policy Think Tank, Institute of Fiscal Studies, IFS, has commended government on how it has managed the economy in the first 5 months of this year. Government managed to spend a little bit less than what was projected in the 2017 budget. However, the challenge was its inability to meet the revenue target, which was 17% less than projected. Speaking to Joy Business after a news conference to assess government's performance, Director of IFS, Professor Newman Kusi, said the situation could have been avoided if government was measured with revenue target reviews.
The revenue target was not able to, achieve. As a result, the government was forced to cut down expenditure so that it will remain in the deficit.
Do you think that the revenue targets were kind of ambitious, and that is why
we have said that already? We said that when the budget was tabled and we reviewed it, that was one of the huge things that we raised. That look, how can you increase, in 1 year, given the rate at which the economy is growing, revenue from 33 billion to 45 billion in 1 year when the economy is not growing, at higher rate? We said that it was, overly ambitious, and this is what we are seeing now. And on the revenue side, other than the need to, strongly enhance domestic revenue administration, which is the collection and accounting for government revenue, plugging down the leakages, and strengthening the Ghana Revenue Authority, making sure that all these, on the declaration of imports and exports and all those things are clamped down. In other words, increasing the revenue administration. We also have to ensure that the economy the growth of the economy is high, because everything, from the tax side depends on what economic agents generate, the activities and transactions and all those things. Those are the things that are taxed. But if the economy is not growing, what are you going to tax to be able to raise the revenue?
Would you propose some expenditure cuts going forward? I mean, there would be, the economists would say, all other things being equal, there would be a mid-year review on Monday. Would you propose some drastic expenditure cuts to help manage the situation?
Well, you see, I think it's going to be very difficult to physically cut certain expenditures. I think what we need to do is to strongly try to improve the management of the expenditure and try to improve the fiscal, the financial management, to reduce or completely, eradicate irregular spending.
Ghana is instituting some measures to lessen the expected impact on the economy if the country should lose the boundary dispute with Ivory Coast. The proposed initiative, Joy Business understands, has been discussed with government and the international oil exploration firms in the disputed area. George Rafi has more.
The proposed measures would look at drilling more wells or even deeper in the current areas that the oil exploration firms are working. This will result in more investments from these firms. There are even proposals to extend some tax breaks to ensure that they secure the required capital from their partners to aid this move. The firms working on the 10th area have been forced to halt fresh drillings as a result of the current maritime dispute between Ghana and Ivory Coast. Talo yesterday disclosed that it will start working on fresh 13 oil wells if the ruling should go in Ghana's favor. It is currently working to purchase a new oil rig for this move. Analysts have projected that the country could lose more than $3 billion in revenue if Ghana should lose this case. The German-based UN tribunal is expected to give its ruling on this dispute in September.
That's all in business this morning. Thanks for watching. Join me again at midday for more business news updates. My name is Emmanuel Apuaji. Have a good morning.